So what are cryptocurrencies? This is a brief outline. Throughout this topic, this whole section on the course, we're going to go through it in more detail through certain things that I talk about. So, this is very, very brief, and I'm hoping it's not going to take too much time. So the basics, you've got the obvious here. What is it and how does it work? So it is a digital currency or a virtual currency, but it's secured by cryptography. Basically mathematics, basically an algorithm that bolts on with security. I will talk about this in a much bigger concept with Bitcoin in the next video, certainly when we talk about mining. This makes it harder for the counterfeit, the double spend problem. The problem with real money, you can belt feed it out. You can fake it as well. Whereas with the double spend, which is essentially emails, imagine sending an image, you've got an image, they've got an image. Now, two of them, duplicates. One's the original, one's a duplicate. You can't do that with Bitcoin. You can't do that with cryptocurrencies, which is pretty good, right? With money, you technically can. Majority are based on blockchain technology, distributed ledger. Now, I will argue this. Most people know this about me. I believe that most coins are not required. Some are not. And you will figure that out very quickly as you go down the rabbit hole of cryptocurrencies. And then when you do your research, you'll be able to figure out, well, actually, does that need an asset? Probably not. And you'll soon figure that out pretty quickly. Blockchains are, and in my opinion, a great way to distribute old relic industries, such as finance, law, and even more than that as well. So certainly stuff like logistics as well. Huge money pit of old technology and traditional values could be getting changed very, very soon. And blockchain can enable that. Cryptocurrency itself could pave the way towards a better financial future with more trust. Cryptocurrencies also have high price volatility, and it could also lead to some criminal activities due to the lack of regulation, because you can hide behind cryptocurrencies a little bit. Not as easy as people make out. It's nowhere near as bad as what the social media kind of, if that makes sense, social media kind of elements to it, and also the newspapers, what they report. However, if you send someone cryptocurrency and you don't know who it is, chances are you're not going to get it back. However, with fiat currencies, there's a lot of money laundering, there's a lot of ways of figuring out certain things with money. But for me, there are certain ways that you can do it. What are blockchains? So a brief outline of blockchains. I will go through different types of blockchains in more detail in a following video, which makes more sense. But essentially, every blockchain is different. Now, we're talking about the obvious here, different forms of them in terms of the niche that they're used, the speeds of the transactions, the security levels that they have, and also how much they can actually store. Some of them a couple of coins, some of them a couple of transactions, some of them massive amounts. So it depends on what blockchain you're after. In simple terms, a blockchain is a connection of blocks in a numerical order. It stores data, in most cases hash numbers, and these are transactions. They are all done on a block basis by block, and essentially it's a record-keeping device. Each block has a set time, so they'll fill it and then it will do it in its time it wants to. 1 second up to 10 minutes, whatever it may be. Each block is a set of transactions that have been verified by a member or each members within the network. These are usually computers, not people, by the way, just in case you get a bit caught out. So these can be like miners, validators. It depends on the type of blockchain though for this. The busier the network, the slower it is. Essentially, stuff like that is a big factor in terms of the spending costs of fees, which we will talk about later on in another video. Certainly we'll talk about different types of blockchain, certainly the Ethereum blockchain, and it will become more apparent as we go along. Blockchains cannot be stopped. They are decentralized to a degree. They should be anyways. And they cannot be rolled back. Everything that is validated is within the distributed ledger forever. So if you put a note on the blockchain, there's a note from Satoshi back in the Bitcoin days of the start of the journey. It's all on the Genesis block. You can still read it. It's still there. Different types of cryptocurrency. The most popular, obviously, Bitcoin. The king, in my opinion. Created in 2008, and it was, created by people or persons or whatever. Satoshi Nakamoto. We don't know who this person is. I quite like the mystery, to be fair. There are thousands of different types of cryptocurrencies now in the cryptocurrency space. Some of them are aiming to distribute industries, Some of them are scams, basically, simple as that. Some of them are massive, some of them are brilliant. Some of them are going to change how we think about finance and even basic stuff, right? Some of them are copy and paste codes, they're rubbish, and I will talk about that in more detail in further videos. Ethereum is the most common smart contract platform, a layer 1 blockchain which enables you to run smart contracts. Much different beast to what Bitcoin is. Very much a future throughput of what the industry is going to be all about and why it is connected in the way it is. You've also got layer 2 protocols such as Matic or Polygon, and this is essentially helping the Ethereum network scale because there is a few little issues with Ethereum, and I'll talk about that in more detail as we go on into it. You've then got stuff like privacy coins, Monero as an example. Just going to use one example here. Personally, don't like them. I think they are not going to stand in time with potential regulations. I understand why people use them, but there's definitely better things to do than store your money in privacy coins, in my opinion. Other cryptocurrencies are around, such as Litecoin. It's been around for quite a while now. It's probably one of the, you probably call it the silver to the gold of Bitcoin. That's what some people address it as. And for me, it's just a normal currency. You've then got a huge network such as Polkadot. You've got Near Protocol as well. You've got Atom. There's loads out there. There's loads. But as a network, as a layer 0, it's going to be a network for multiple different assets to run off it and sharing the same security. And then you got stuff like XRP, Ripple, helping money be transferred via banks and big, massive corporations between countries, so it's borderless payment. So these are a bit of a different stance of cryptocurrency around. This is just the basics. I will go through this in more detail in other videos. Legal and regulations. Is it legal? More to the point. Yes. However, fiat currencies are authorized by and have an authority from governments or the monarchy, whatever, right? Cryptocurrency does not, right? That's where the difference is. Cryptocurrencies are legal though, right? So don't worry about it. They do come without regulation, so money protection. So in the UK, we have a thing called the Financial Conduct Authority. This enables us to be insured in case your bank implodes on you or whatever happens. In a lot of cases, you need to ensure that your cryptocurrency assets are stored safely. Next slide, we'll talk about this a little bit more. Plenty of countries have already stated that they are legal, and some countries have also regarded Bitcoin as an example as property. UK is one of those. In 2022, get my words out, El Salvador and the Central African Republic were the first countries to accept Bitcoin as legal tender for the monetary transaction. So they've actually adopted cryptocurrency or Bitcoin essentially as a way of spending money on their country, which is crazy. You've also got the likes of Japan, who have classed Bitcoin as property, same as the UK. And you've also got in the EU. They are legal in the EU, but futures markets you need to qualify. So trading derivatives, for example, you need to state certain things and more information to enable you to do that. Within the US, you have some problems with the SEC. This is quite common, most people know this. But certain cryptocurrencies you cannot buy or you cannot have any sort of partake in them because of the SEC. It's certainly on new assets or making money in terms of passive income. That seems to be quite a big problem in the US. A lot of people in the US get quite disheartened about this. Safety, again, quite obvious, but I need to talk about it. There is a risk of losing your cryptocurrency assets. When we talk about, safety and transactions and wallet addresses, this is the basics of it. Do not send it to the wrong network or the wrong address. If you do that, you're going to lose your money. Simple as that. You cannot get it back. Regulation risk. Some might fall in price due to negative policy adoption. We're in a world where there's no regulation. When there is regulation, it probably will upset the apple cart a little bit. Now, country-based banning, for example, India, for example, is a great one. A few years ago, every 2 months, it was like an article coming out, India's going to ban cryptocurrencies. It used to cause chaos. Not anymore, but ultimately you get the idea. Certain countries will not like certain types of coins, whether they're high-intensive mining currency coins, especially when we're talking about the world now with net carbon zero and all that kind of malarkey. It's going to be interesting to see how mining processes work, right? Just thinking outside the box here for the future. Even outlawing some types of coins, such as privacy coins, may well cause a problem if you're holding it. Simple, really. Now, this is another obvious one. Third-party risks. What about exchanges? What about if they get hacked? Mentioned just before, safety, right? You may have a problem if you're not keeping your cryptocurrency assets safe. Have you trusted someone with a wallet? Have you trusted an exchange to, store your own stuff? We will talk about wallets in more detail later on. But ultimately, what if something goes wrong? You could lose because there's no regulation, right? There's no third-party kind of element to say, oh, by the way, if we get hacked, you're covered. It's fine. Just don't worry about it. But reality is, you're not. Programming risks. Again, a lot of people say that investing's easy, that it's fine. As soon as you buy, you're going to make money. People forget this. No, you're not. Because anything can go wrong. Everyone looks at the success stories. So even what I was talking about in the previous videos before, regarding obviously the S&P 500, the Nasdaq, etc., oh, buying that is great. But reality is you've got to have success, right? Within a company, within a crypto asset, within a stock, within a property, within a car collection, right? Sometimes it just doesn't go your way, right? And the biggest risk with cryptocurrency is programming risk. And also the team imploding themselves. The team might have an issue with a smart contract. It may well cause a hack or an exploitation, and it could lead to price loss. That is a huge problem. Or worse than price loss, in my opinion, is sometimes liquidity loss. So the money's gone and that's it. You can't even sell it. Gone. Scary. Another one, and the final one realistically in a sense, is market manipulation. We get this quite a lot in the crypto space. There's a lot of manipulation. Not massive, but it depends on what you're trading. If you're trading the big assets, it's totally fine. Don't even notice it. So that's fine. But if you're trading the lower cap coins, so what I mean by this is low valuation coins like penny stocks, they can be really aggressive, like up and down like a yo-yo. Really, really hard on you, especially if you're new to the space. So you got to be very, very careful with those ones.